And the last speaker on this session is Mark Taylor, due diligence. I'm sorry, Mark Taylor. Yes, second to last. And that is doctoral candidate Johanna Rosenqvist and mandatory insurance as an instrument of control for greener business. Thank you.
The purpose of my presentation is to set forth reasons for a reform proposal consisting of introducing mandatory insurance under the Environmental Liability Directive, the ELD, and to do so from the perspective of looking upon environmental damage as an effect of unsustainable business. Since business as usual is a non-choice, several efforts are naturally necessary in order to strengthen the path towards business conducted in a manner that actually works for the Earth and not against the Earth, that works for all life on Earth, including humanity, today and in the future. Mandatory insurance introduced on an EU level could, in the light of this and in the context of the ELD, be one possible way to support the process of greening business. The EU Environmental Liability Directive is connected to the policy on the environment. And this policy encompasses, among other objectives, the preserving, the protecting, and improving the quality of the environment. And it is clear that in order to implement the objectives of the EU environment policy, it's very important to both prevent and remediate environmental damage. And in order to help in the process of ensuring that environmental damage is handled adequately, the EU has adopted the Environmental Liability Directive. The ELD can be said to have two aims that should be placed in the fore. The first aim that should be looked upon is that polluters should pay for certain environmental damage that they have caused. They should also pay for the cost of preventing the imminent threat of the same type of damage. Therefore, polluters are held financially liable under the ELD under Article 8. The second aim is that polluters should pay for damage not only because they should carry the financial burden, but it is also because they are expected to change their behavior. And that is to be in order to minimize the risk of environmental damage occurring. The basis for the financial liability under the ELD is the polluter pays principle, which is one of the principles of the EU environment policy. Naturally, in order for it not to become a hollow principle, the operators must be financially strong enough to be able to pay up. It is clear that the ELD does not focus on the polluter pays principle as an isolated principle. It focuses on it in the context of sustainable development. At the heart of sustainable development, of course, lies the quality of the environment, today and in the future. Ensuring the implementation of the polluter pays principle is thus important from the perspective of not only allocating costs to the polluters, but to not allocate costs to future generations. Therefore, it is imperative that polluters actually pay for ensuring that damage is dealt with adequately. The ELD does not demand of the operators to hold ex-ante financial security. This means that even though there is a directive that aims to ensure that environmental liability and environmental damage is handled by the operators and that environmental damage is prevented and remedied in line with sustainable development, there is a risk that this aim will not be reached. The risk is of insufficient financial resources on the part of the operators, thus implies that there is a risk that the ELD may fail to promote sustainable development. So my question here is, how could this risk be minimized? And one possible way is through introducing mandatory insurance on an EU level. Mandatory insurance as a way of handling financial liability was discussed in the process of the coming into being of the ELD. There were opinions for and there were opinions against. The ELD in itself has not closed the door on introducing mandatory financial securities on a harmonized system. In addition to this, several member states have already chosen the mandatory approach. Why not argue that all member states should be strongly encouraged to follow this example, instead of arguing for the introduction of mandatory insurance on an EU level? The reason is that mandatory insurance on an EU level not only would ensure sufficient financial coverage for damage occurred within the whole of the EU, it also holds the possibility of functioning as an instrument of control. For greener business, mandatory insurance on an EU level would enable the EU to more precisely set the scene for the aim of the use of insurance. And to do this, in this process, include the objectives of the EU environment policy in the aim and in the functions of mandatory insurance. This is so since generally under mandatory insurance, the conditions of insurance and the premiums become the subject of further regulation. But next question is if mandatory insurance is not contradictory to the polluter pays principle. In the ELD, the polluter pays principle is placed in the context of financial securities, with the aim of shifting the burden from the polluters to a financial institution. But this really means through a financial institution to the collective of insured or polluters. Does this mean that the polluter pays principle is either overthrown or undermined? In the context of the ELD, the question whether it is undermined or overthrown will depend upon how the issue of burden shifting is addressed. It must be addressed from the perspective of inducing operators to change their behavior with the aim of reducing the risk of environmental damage occurring. The question is therefore how the polluter pays principle can be applied through mandatory insurance without missing the point of this central aim. How could operators be incentivized to risk reduce with focus held on environmental risk? Well, it could be done through using mandatory insurance as an instrument of control with focus held on risk reduction and risk awareness. In order to promote prevention of environmental damage, all forms of financial security should be based on risk differentiation. Risk differentiation is important for incentivizing operators to want to risk reduce. Mandatory insurance offers a possibility to regulate both the conditions of insurance and the premiums, as I said earlier, and should be applied in a manner that ensures that the premium really reflects the risk. The financial contribution to the loss should thus be in proportion to the degree of the contribution to the risk. There is no fundamental insurance rule that requires the premium to reflect the risk. There is a freedom for the insurers to provide the services they want, as long as they stay within the limit of their permits. And for example, competition among insurers, it may well influence the levels of the premium. For an insurance solution to work towards sustainable development, the intention must, however, be to reduce the risk of the occurrence of environmental damage. The process of risk assessment reveals the blueprint of the operational activity, especially since there is a duty of disclosure on the part of the insured to be. This would mean that the operator's overall environmental risk could be revealed, it could be addressed, and it could be adjusted. This would encompass the risk for damage that is not addressed under the ELD. For example, the ELD only addresses environmental damage of a certain type and a certain severity. It also excludes environmental impacts of a more diffuse character, since these kinds of impacts are not possible to place within the context of environmental liability. This does, of course, mean that such impacts do not pose a risk to the environment. So if we could encompass them, we would also gain. So focusing on reducing risk of environmental damage of any kind occurring must be considered to support the aim of that environmental damage should actually be prevented and remedied in the line with sustainable development. from the perspective of risk differentiation applied to incentivize operators to risk reduce, it does therefore seem essential to argue for a non-negotiable regulation entailing that the premium should indeed reflect the risk. In the case of mandatory insurance, this would be possible since there is room for regulating both the premiums and the conditions of insurance. The intention would be to use the well-established legal institute insurance in a somewhat different manner than it is used today in order to incentivize operational activities to become more green. The word peace is also connected to the word pay. So pay can be traced back to pax, to peace. So why not apply the polluter pays principle or the polluter peace principle in this manner? Why not amend Article 8 of the ELD through introducing mandatory insurance for operational activities, harmful or potentially harmful to the environment, to ensure that damage is adequately handled, and by truly using the polluter pays principle in order to induce changed behavior so that we can make peace with the earth and with future generations, starting now and continuing through eternity. Thank you very much.